Greetings. We're going to start by taking a look at the POC Job Analysis report, and I'm going to basically walk you through all the aspects of this thing and focusing on what affects what in this really very powerful report. First off, what the POC report even stands for. The POC stands for Percent of Completion Accounting, which basically refers to managing project revenue and completion status based on comparing your cost to date to your estimated cost to date. For example, if you have a project that is estimated to cost $100,000 and you've realized $50,000 to date cost, the project is considered to be 50% complete. If your company manages the revenue using POC accounting practices, that would basically mean that your accounting group may be recognizing 50% of your expected revenue for a job even if they've not invoiced anything yet. In fact, the report will actually manage the revenue for them. Now, before we run the report, we want to make sure that we have a couple of basic settings set up. And the first one is under Utilities, Program Settings and Defaults. You'll notice there's a reporting tab here. We want to hit this, and we probably don't want either of these set up. Basically, we can include burden factors when we run this report. Only check these if you want to add the burden factor or a tax factor to your estimated cost as well as your actual cost. If we don't check anything here, it will only add the burden factor to our estimated cost. Once you check these, you will want to hit the OK button down at the bottom right-hand corner of the screen. The other thing that we want to do is set up our burden rates. We do that by going to Master Files, Miscellaneous, and Departments. And then on every department that we have, we can go in and we see right here, and this is a percentage that we may want to add. So for example, if we're going to add a 50% burden factor, or 400% in this case, I would just come in here and put 50%. Now what that'll do is when I run the report, if I choose to, I could go ahead and it will include a burden factor of 50% above and beyond my actual cost on my actual labor or my estimate and actual if I've checked those prior solutions. The other thing we can do is apply a percentage for tax here. This is useful if your company does pay tax upon receipt and breaks the tax out, so we want to include the cost of that tax in our job cost reporting. You can put that on any of the cost codes that would, where the sales tax would be applicable. Now, when we're looking at our job, and here's a job record I've set up, I do not go into how to create jobs here. We're assuming that you're at that point. But what we can do is we go to the reporting tab, and you see where you have the ability to override the department standards. So when I set up a department, I can put what my burden rates are going to be, but I can actually come in here and say, hey, let's override those, and I can set unique burden rates that would apply to this job specifically. All right, now let's look at actually running the report. Before I do that really quickly, I'm going to put a basic estimate on a report. Now, your estimated cost is going to come from converted lines on quotes. I'll come back and do this for us in a second, but the simpler way, because I don't have an estimate right now, is I'm just going to hit the job estimate tab, and I'm going to put two lines in here. And it is important to put a date with your entries. This allows you to actually run constrained activity reporting, where maybe later I've got a long-term project and I'm adding additional money to my estimate, and I want to be able to run this report and have it historically accurate. So that's kind of cool. So what I'm doing here is I'm putting in the current date and my cost code of equipment. It's not important to put units with equipment, really only labor, and my total expected expense. And if I wanted to, I can put my expected revenue from that particular cost code as well. And then I'm going to put labor, and you notice on labor I am putting units and my expected expense. And again, I'll go in and I will put expected revenue in here. So just having this now, I do have a basic, very basic estimate. I'm going to come down and save this. Now in addition to having some estimate, I did take an order, and I want to show some actual cost. So on an order, you'll notice that I have done two things. I have logged some time, and actually I'm going to go ahead and redo this in front of us here, so I'm just going to kill that. But I have put equipment on the ticket, and I have hit that post to COGS button, which basically commits that equipment to job cost. And I will also go in and log time to the job. I'll do that from the time log tab. So I'll hit the time log, and I will log new time. And I will put it to labor. And I'll just put 10 hours on the job. So I now have some cost. So now let's go ahead and run the report. I choose the POC Job Analysis report. Running the selection criteria here, you'll notice that it's already filled in my job ID. I can leave everything else alone coming down to this point here. Now I choose whether or not I want to include non-received purchase orders. You'll notice that this will default to on. You pretty much always will do this. What that does is on the report, if you have a purchase order that has not been received yet, it's going to show up under committed cost. I'm going to apply burden rate. I'm going to turn that off right now. We'll look at the project with burden and without, so we can see how that works. And I'm going to do this to the minimum amount of detail I would ever want to look at, which is basically by department, and the job's only going to be one-to-one department, and looking at it to a cost code level. If I wanted to, I could go down to individual detail, right down to transaction detail, and we'll actually do that here in a minute. But for now, I'm going to keep it simple, and I am simply going to go to a cost code basis. I am not including burdens, and I will use my item cost instead of my employee pay rate. Basically, that's going to, on that labor item that I logged to the ticket, it's going to use the cost that's actually on that item setup, not the cost of the actual employee, and I do not need to constrain activity. I'm going to look at my job cost as a whole. Now I hit the print button, and I'm doing that to screen. And this pulls up my screen. Let me recenter here real quick. There we go. All right, and I will zoom in so that we can see this. Alrighty, looking from left to right, first off, everything here is my by cost code. And so remember that my actual, I don't have any hours associated with equipment, but I have 20 hours that we estimated, and we showed 10 hours actual. That gives us a variance of 10 hours. We have estimated expenses of 10,000 on equipment and 2,000 for a total of 12,000. My actual expenses, there's $43.90 that is coming in from that equipment line that we posted on an order, and here is $550 that is coming in from the time that we logged to the ticket, those 10 hours that we logged to the ticket at $55 an hour, obviously. Now we've got our total expenses, and we've got our variance, our estimated, our actual expenses versus our estimated expenses, and telling us what we have left. So we have estimated 12,000. We've had 49.40 of actual, leaving a variance of $7,000. We don't have any purchase orders on the project, and we can look at our total projected cost, our estimated cost to complete, and our estimated revenues on the project, which is $30,000 total. So if we come down to the bottom section now here, we see the original contract is $30,000. That is coming from that estimate tab, and as well as if we had any money that was coming in from our original quote. Total contract, $30,000. We don't have any change orders yet. We have not invoiced anything yet, and so remaining to invoice $30,000. total estimated cost is $12,000. We've got a cost to date of $49.40. So basically we are 41% complete on this project, theoretically. Are over or under budget. We're currently under budget because we're not done, obviously. Revenue to date, we have not recognized any revenue on this project. And our projected profit, $18,000. Profit to date, $49.40. We minus $49.40 actually. So we have a variance. And our over and under refers to our over under billing, which basically says that if we were doing percent of completion accounting, we should take 41% of our revenue, which in this case would be $12,349, and that is what we should book to revenue if we were so inclined. Now let's pop out and run the report now, and we're going to do the same data, but we're going to run the report with burden factor. So this time around, we're going to come in and I'm going to say apply burden rates. I'm going to hit show screen, a little off your view here, and I'm going to hit print to screen. Okay, now as we look at our report, estimated actual hours, no changes there. Estimated expenses, no changes there. Actual expenses, but if we look right here, we see burden. And we see that we've got an additional $545 being added to our total expenses, and that is that burden factor that we've applied to our actual cost. Very common. And you notice in this case I did not have a burden on my materials. I only included burden on labor. I did that because I see that as a common thing. So now everything else rolls out, only now we're including a burden factor. Now returning to our job, let's look at some of the other ways that costs will get to this report. Basically anything that has that job ID on it is going to get there. That could be a journal entry, it could be purchases. We'll look at going ahead and we'll add a purchase order to this job, and I'll put that to a vendor. I'm going to skip ahead here. Okay, I popped ahead, save some time, and you notice I've created a purchase order. Purchase order has that job ID on that line. Now, because I've got it, let me slide up here so you can see what I'm doing, but I'm going to hit import. Let's go ahead and do it real quick. I am going to include my non-received. I'm going to keep my burden factor in there. And now our report is back up, and you will notice that we have a committed cost. So again, journal entries, AP vouchers with the job ID on them, whatever we're doing, all of the time we're logging, everything is coming out here and hitting this report. Okay, that wraps up part one of our review of the POC Job Analysis report. I will follow up in our next part with showing you how to automatically have the report manage your revenue recognition on percent of completion jobs. Thanks.